Director and CEO of Ridley Agri Products. Could we give Quinton a warm welcome?
Good morning, everyone. Thank you to PAC Partners and to CBA for this opportunity. The title of the conference, Sustainable Growth Through the Cycles, I think is very apt for our Ridley business. And as we, notwithstanding we're in an ag sector, have managed sustainable growth. So what I was going to cover off today was a review of our 3-year plan that we put out 2 years ago at this very conference. We delivered what our 3-year plan was for Ridley, and we're now 22 months into a 36-month plan, and I'll just give you an update on our performance so far. So that was one of the slides that we presented back in May 22. And you can see our aspirations for growth underpinned by our sustainability program. We've got 2 large reporting segments, and we have different strategies within that. So I thought I would just unpack for you our performance against those strategies as we've put them out there. You can see on the right-hand side some traffic lights showing those initiatives that we've delivered already. The amber ones are the ones in motion, and there's one red dot there where we've needed to pivot on our strategy, and I'll cover a bit of that later. This is the bulk stock feed segment, and it just demonstrates for our business the strategy for us to grow market share. So Ridley's got 13 feed mills across the east coast of Australia, and we are trading, we're the largest domestic consumer of grains. We've got a team of nutritionists. We've got a strong platform on which to grow this business. And so by focusing on our customers, investing in that partnership, being price competitive, we've been able to grow the volumes through our business. And as this is a large fixed cost business, by investing in customer acquisition, we've gained economies of scale, which is supporting both the partnership with our customers as well as growing our bottom line. And so through the process, we've utilised our spare capacity and had to continue to invest in the capacity within our business. So I'm just going to look at our business in the bulk stock feeds business in monogastric, which is 6 mills in Australia, and the growth plan that we've got for the monogastric business. You can see along the bottom there we've expanded 3 of the 6 mills, and the 4th capacity expansion will complete next month. And so that's given us a 10% increase in our monogastric capacity. You can see the tops of those bars in red. You can see where we've grown our business predominantly in pork customers through this plan period. This has coincided with the blue bars, which are the broiler sector, and a flat growth, well, a zero growth for the broiler sector. And that's been driven by a fertility issue within the genetics that they procure from an international company, one of 2 genetics providers, and with that's capped the production that's been available, the number of birds that have been available for the poultry sector. So instead of growing at 2 to 3% per annum, we've seen that as pretty flat. So from our point of view, we've put on the capacity as we do see that production within broiler sector correcting, and going forward, we've now got the capacity to accommodate that growth in the years ahead. For this part of our business, notwithstanding that constraint on the broiler volumes, we have grown earnings, and that's by continuing to manage costs. We've brought some of our production back from 24/7 to 24/5, just to make sure that we can contain costs through this period of the cycle, and I'm pleased to say that we've continued to grow earnings. If we look at the ruminant part of our business, so we have 7 feed mills in this area. We've expanded 2 in this planned period, and that has been on the back of growth in dairy. And as you know, dairy can be a bit cyclical, but you can see through those dotted lines how we've had growth quarter on quarter, thanks to us growing our market share within the dairy sector. And then the red bars are beef and sheep, where we don't have as big an exposure, but you can see Tom referred earlier to the El Nino, which was dry in the first quarter and second quarter of FY24, but it soon became the wettest El Nino on record. So as a result, you can see the supplementary feeding that we achieved through this period. So as a whole, this part of our business continues to perform well, and we've put on extra capacity. We've come from a 20% market share in the industry to today 25%, and I would be disappointed if in 5 years we're not at 30%. The second part of our business is the packaged and ingredients segment, and this is made up of different business units. And this is the strategy that we put up at this conference 2 years ago. I'll just start on the left-hand side with our ingredient recovery or rendering business. We are the largest renderer within the country, with a large plant here in Melbourne and one in Sydney. And our strategy here is to climb the wall of value and to take the raw materials that we're receiving and produce higher value bespoke products, mostly driven by the value that's required and the customization for the pet food sector, but also for the aqua sector. So I'll just reflect how we've gone in this premiumization journey. So from the start of this performance period back in June 22, where we had about 21% of our products were converted into premium products, the rest sold as tallows, oils and meals, which are more commoditized, through to last month, where following the acquisition of the Oceania Meat Processors business, which is a New Zealand business that has operations in New Zealand and Australia, selling to the global pet food market. Following that, our premiumization percentage has grown to 33%. So this is just the journey that we're on, and you can see how much commoditized product there is still to commercialize and premiumize here. The other part of this business unit is our packaged products, Aqua and Novak business units. And the link between all of these is our extrusion capacity. So extrusion is our processing capability. We have a plant up in Brisbane, and it's been producing both for the aqua feed market and also pet food, which are all extruded products. That plant has been operating at 24/7 for a couple of years now, and we've been wrestling with servicing the aqua feed market, where there's an excess capacity and getting lower returns from our extrusion plant, and versus pet food supply, where we've been constrained by not having capacity to grow with our partners in that area. So we've made a pivot within this financial year, and that's come to bear in the last few months, where we've extracted ourselves from some of the less profitable finfish customers, and we're just being very targeted. We're going to continue to service the prawn industry where we've got a competitive advantage with our Novak ingredient. But we've pulled our production back to a 24/5 operation, and we now have the capability to grow with our partners on the pet food side, and that is where the margins are. So a short-term pain through this restructure, but a long-term growth opportunity for us and improved earnings. All of this is within our capital allocation disciplines within the business. We've grown earnings through this planned period so far, 10% growth in FY23, 5% growth in the first half of FY24. We invest as a priority in our maintenance capital to sustain these earnings. We've stayed, lightly geared. Our target is to be somewhere between 1 and 2 times EBITDA. We've only just reached 1 times, and that is based on, following the acquisition of OMP for 53 million Aussie. And that base gives us options to grow the business, both organic growth, and you can see 5 expansions within the bulk stock feeds, plus growth in the packaged and ingredient sector, the acquisition that we've delivered, and a progressive earnings, a dividend payment to our shareholders. So through the period, and this is just a moment in time, but as at the 15th of May, we had delivered 18.7% total shareholder return. This plan is on the foundation of sustainability pillars. These pillars were presented back in May 22, and the whole philosophy within Ridley is to make sure that our sustainability journey is integrated within the operations of the business. So we don't run a parallel sustainability program. It's all part and parcel, owned by the line management. And as you can see on the next slide, we put out 2030 commitments last year. And so on the right-hand side, you've got the 7 years between FY23 and 2030. And we've just scored ourselves as at March this year on our progress to date. So we've already delivered the FY24 targets, and on 5 of those 14 initiatives, we're ahead. And I'll just explain one example. Obviously, reducing our CO2 footprint is critical, and we've got a 10% reduction target for Scope 1 and 2 emissions. This is clearly a core deliverable for us, and we've gone right ahead, and we're already well ahead on that program, bringing down our gas and electricity utilisation, which is good for the community and the environment, but also good for the bottom line. So a trading update. This is what the board put out a week ago, but just a summary for those who follow Ridley. We're expecting earnings growth in FY24 at an EBITDA before significant items level relative to FY23. That's going to come through growth in our bulk stock feeds segment, which is offsetting lower earnings in our packaged and ingredient segment. I've got there the main drivers for that in the second half of FY24, and I'll leave that for anybody who wants to follow those, but in the interest of time, I won't go through the ups and downs, but pleased that we can deliver growth again within FY24. Just a brief update on the acquisition of OMP, which completed on the 28th of March as planned, and the integration is going well. Good response and endorsement from both the customers, which are mostly multinationals over in North America, as well as the suppliers both in New Zealand and Australia, and the staff. So all going to plan, and only 1 month of trading, but ahead of expectations, importantly. So the outlook for Ridley is that we expect to continue to grow the business, firstly from further premiumisation, particularly in the pet food sector. Secondly, we see volume increases through the bulk stock feeds part of the business, and that's enabled by the debottlenecking and capacity that we've added. And then this restructure that we have delivered in the last few months, we believe will position us well for increased earnings going forward. Overall, this is a strong cash-generating business, and we are confident that we can continue to maintain the investment within the business, continue to grow our existing organic business, and review M&A opportunities, but importantly to continue with progressive dividends. And the board has just signalled to shareholders here that we are reviewing potential capital management strategies. So Max, that's the wrap for today. Thank you.
Thank you, Quinton. We'll move on to our last, because I think we're a bit tight on time, we'll move on to our last presentation for this session, which is Ben Fargar from